Zkouška. Začínáme. Good morning, everybody. Let me introduce this webcast, which was prepared for you to show you the possibilities how to tax your income from the company share plan, and also to show you some practical aspects of preparation of Czech personal income tax return. First of all, I would like to introduce myself. My name is Robert Bezecný. I'm a manager in Deloitte, and together with me, Lucie Slejšková and Vladimír Toráč will be providing you with the practical information about your taxation. We will start with organizational hints for you. You can see on your screen in left down corner the place for the questions. You can give us any question you have, but unfortunately, because of the volume of the participants and because of the time frame we have, which is limited to 1 hour, we will have a look at your questions after the end of this session, and we will send you later the summary of the frequently asked questions to those questions what were not answered during this session. The purpose of this session or of this webcast is to tell you something about what happened in your firm in past year. As you already know, the NetSuite company was taken over by Oracle, and this resulted in changes in the equity-based plan organized by your company. There are two types of shares: unvested shares, which stay as it was, just the liabilities towards you were overtaken by Oracle. So all the conditions of the plan remain the same, with only exception that Oracle is the company which is supposed to provide you with the fulfillment in the future. The other type of shares are the vested shares, or the shares which vested during the 2016. There is a fiction that it was automatically sold out, and this session is just aimed to these shares which vested in 2016 and which has several connotations to your taxation. And now I will pass my word to Vladimír to start with the practical aspects of your taxation.
Okay, good morning, everybody. Thanks, Robert, for the introduction. I'm here to present the practical information, the practical implications of your RSUs. As you may see, basically there are some tax obligations related to your participation in the Oracle equity plan, and we understand that the implications and related obligations may be kind of confusing for you, and that's why we have prepared this webcast to guide you through all the related obligations for you to better understand the process, to make it a little more clear to you. On this slide, there are a few important terms that you should understand in respect of your RSUs. I would like to briefly comment on the life cycle of an RSU. I believe you are probably aware of this, but just to remind you, there are three different important points. First point is the grant date. Then we've got the vest date, and obviously there's also a point of sale. So what is the grant date? The grant date occurs when your employer initially provides you with the RSU, with the restricted stock unit. Uh, this is basically a promise. This is not an income to you because you are not the beneficial owner of the share yet. So you are not subject to tax at this point. Once the shares become vested, you meet all the conditions. Basically, one of the important conditions is that you stay with the firm for a certain period of time. Then the shares become vested and you become the beneficial owner of the share. And this is basically your income because you have acquired a share, and this income is considered to be an income in relation to your employment activities. So you will have to tax this income in compliance with the employment income tax legislation. Then because you are the beneficial owner of the share, then you obviously can do whatever you want with the share. So we assume you will also sell the share in the future. So you will also have sorry, you will also have obligations upon the sale. So we will talk about the sale obligations on fear on the further on the next slides. This slide will introduce you to the steps that you should take once your RSUs vested. As I said, this is considered your employment income because you have become the beneficial owner of the share, and you are obliged to pay income tax, the flat tax rate of 15%, and you may also be required to pay the solidarity tax of 7% if the income exceeds approximately 1.3 million Czech crowns. This slide also summarizes the responsibilities of your employer and the responsibilities of yourself. As you can see, basically your employer does not have any obligations in this respect because they are not required to withhold the income tax when your RSUs vest. So it is solely your obligation to report this income in your tax return. Oracle is also not required to withhold any social security or health insurance contributions. So this may be a good news for you that you will pay only the income tax, and you should report this income in your return. But firstly, what you should do is that you should refer to your E-Trade account statement for the details on this vested shares. But I will be speaking about this in more details right on the next slides. Yeah, this is it. Here you can see step by step what your obligations are in terms of vested RSUs. So firstly, what you should do, you should take a look at your E-Trade account, because we understand that E-Trade is the is the instrument that is facilitating your RSUs. So you should have available some statement where you will see the details on your vested RSUs. We have attached an example on this slide for a future reference. You should realize that the fair market value at the vesting date is your income. So you should report this income in your tax return. But firstly, what you should do is that you should convert the dollar amount into Czech crowns, because the income can be entered into the tax return form only in the Czech currency. You should use the exchange rate published by the financial office. We have posted a link for your convenience for a future reference, where you will find the annual exchange rates uh, for you to calculate the right amount. And then what you should do is that you should enter the calculated Czech currency amount on the row 31 in your tax return. But my colleague Lucka will comment in more details on the next slides. She will guide you through the process of completing your tax return. So at this point, just for you to know that you should report your income in your income from your vested RSUs in your tax return, and how it will be reported. Lucka will comment more details. So this was about the vested shares. This was the first, let's say, the first category in relation to your participation in equity plan. And now we are getting to the second option, which is the selling of your shares. So obviously, if you sell your shares, you also will have some obligations. You either realize a capital gain or a loss from the sale, and you should pay the income tax at a flat tax rate of 15%, and again you should pay through your annual income tax return. The good news there is that this income from sale is not subject to solidarity surcharge tax. Only the vested shares are subject to solidarity surcharge. So the income from the sale of the shares is only subject to the 15% flat tax rate. The other good news is that also you do not have to pay the social security or health insurance contributions. But what you should do is, again, you should refer to your e-trade account statement for the details on the sale. You should convert the income from the sale into Czech currency, and you should report your income through your annual income tax return by the filing deadline. What are the filing deadlines and obligations for payment of the tax? I will comment on this on the next slides in more details. And right now, at this point, I can also tell you that in certain situations, you may be also required to file a special form, which is called announcement on tax-free income. In Czech, it's osvobození o oznámení o osvobozených příjmech, and I will explain this in further details right on the next slide. So what are we looking at right now? We have a nice diagram in here which is summarizing the questions you should consider when you sell your shares. The first question you should consider is if you actually held the shares for more than 3 years. This is applicable for the shares that are vested after 2014, or if you actually held the shares for more than 6 months. This is applicable for the shares that vested before the end of 2013. So, for example, if your shares vested during 2015, then you should consider the 3 years time test. And if your shares vested, for example, in 2011, then you have to analyze the 6 months time test. So if your answer to this question is yes, then you are a lucky person, because this income from the sale is exempted from tax. It means that you do not need to report or disclose the sale in your tax return. There is no further action required from your end, besides that there is a risk of obligation to report the exempted income on the special form. I will tell you about this in a few seconds. And the other question is another question you should ask yourself is if the gross income is from sale is less than 100,000 Czech crowns. If your answer is yes, then it means that your income is below this threshold. Then again, you are lucky, because this income is exempted from tax, and you do not have to disclose it in your tax return. But if your income is no, it means if the income from the sale of the shares is higher than 100,000 Czech crowns. I would like to emphasize at this point that it is the gross income. It's not the capital gain. So even though you realize a capital gain of 1 Czech crown, but the total gross income is over the threshold of 100,000 Czech crowns, you have to file a tax return, and you either realize a gain, or if it was a bad day, you had a loss. But either way, you have to file a return to report either the gain or the loss. And the last question in this regard that you should ask yourself is, or what you should analyze is the level of the exempted income. If the level of the exempted income is 5 million, is more than 5 million Czech crowns, then you are obliged to file a special form called announcement on the tax-free income. I will show you how it looks like right on the next slide. Yeah, here it is. As you can see, this is the first scenario. This is the scenario where you were lucky, and you did not have to tax your income from sale. The income was exempted from sale. You met the conditions specified in this diagram. So you do not have to tax the income, but you should analyze the level of the income. It means that you should consider if you need to file the special form. If by chance the income is higher than 5 million Czech crowns, then you should report it on this special form. We have posted a link for your convenience, just for a future reference to see how it looks like, and what you should enter in this form. And right on this slide, there is the second scenario. It means that you are obliged to tax the income from sale. You did not meet the conditions for exemption from tax. So what you should do, you should again refer to your e-trade account statement for further details on the sale proceeds amount from the sale of your shares. If the sale proceeds are higher than the fair market value at vest, then you realize the capital gain. And if the proceeds are lower than the fair market value at the vest date, then you actually had a capital loss. The next step, what you should take is that you should convert the dollar amount into Czech crowns, again by using the published financial office exchange rate. Again, we have posted a link for your convenience. And then the next step you should take is that you should enter uh, the income from the sale into the attachment number 2. Again, as I said, Lucka will comment on this in further in more details. But at this point, I can tell you that you should enter the sale proceeds amount, and you should enter the fair market value at vest amount, which represents the expenses. So the income is the selling price, obviously, and the expenses are the fair market values at vest of your shares. And we are getting to an end in terms of the tax treatment of your RSUs. There is the final step for you to take to be compliant with the income taxes law. So the final step, obviously, it is filing your tax return. So once you have completed your annual income tax return, you have to file it with the financial office. At this point, I would like to emphasize that you might be required to also file the announcement on the tax-free income, as I said on the previous slides. So you should file your return together with this announcement by the filing deadline. But what is the filing deadline? The deadline for filing your return is the 1st April of the following calendar year after your RSUs vested or were sold. So if your RSUs vested in 2016 or you're sold your RSU in 2016, then you should include them in the 2016 tax return. And the filing deadline is 1st April 2017. But since this is Saturday, it is automatically postponed until the first working day, which is the April the 3rd, 2017. But if you decide to file your tax return through a tax advisor upon power of attorney, then your deadline for filing your return is postponed automatically until 1st July 2017. Again, it is the 3rd July because of because it is postponed until the first working day this year. And for your convenience, just to sum it up, there are general tax-related rules in brief that we have outlined in this box. So you can see, like obviously you are aware that you have to file your income tax return on the official form published by the Czech Ministry of Finance. The figures must be denominated in Czech currency, and foreign currency must be converted using the official foreign exchange rate that is published by the financial office. You have the link available on the previous slides. It will take you to the table with the exchange rates. And then what might be important for you to know is that the tax payable resulted from the tax return must be paid to the financial office by the deadline for filing the return. So it means that the deadline for filing your tax return is the same as the deadline for the payment of your taxes. And again, what you should do further is that you should identify yourself through the return. It means that you enter a tax identification number if you have one. If not, you should enter your birth number. Just it should be used as a payment in identification code when processing the payment of your tax liability. And if you are not sure what your local jurisdiction is, then you can use our link posted here. You can just type your permanent residence address, and it will automatically tell you to which financial office you should submit your tax return. Okay, so I believe this is everything from my end, and now I will pass my word to my colleague Lucka, who will tell you more detail how to complete your tax return. So thank you for your attention.
So hello everybody. Thank you, Vladimir, for introducing the RSUs and the tax treatment of them. So my name is Lucka, and I will introduce you and go through the tax return process preparation. So I believe that you understand the tax treatment of your RSUs now. So maybe just to summarize, when your shares vested, you are obliged to tax your income as the employment income. And when you sold these shares within 2016 tax year, maybe automatically done through your e-trade account because of the acquisition of NetSuite with Oracle, then this income is treated as other income. And now we will go through the completion of the tax return form. It's not so difficult, and I will go through the process with you. So when we go to the first page of the tax return form, in the top left corner, there is a space to put the financial office according to the Czech legislation. As Vladimir already mentioned, there is a link which will invite you to the page of the finance directories, and there will be a possibility to put your permanent residence address, and they will show you the financial authority which you are residing to. So these will be the first two rows to be completed. And maybe just to mention that this is the standard tax return form, which has 4 pages and some attachments. And we will go through this general standard tax return form. And for the sake of completeness, there is a new simplified version of the tax return form, which was introduced for 2016 tax year. However, this cannot be used by you because you have the income from foreign company, from Oracle, which is the US company. So it's not possible to be used the simplified tax return form So if you hear somewhere that there is this form which has only 2 pages, you are unlucky, but you need to complete the standard tax return form, which has 4 pages and the attachments. But all the tax return has some rows which are numbered. So we will go through all the numbers, almost all the numbers, one by one till to the end. And maybe one recommendation from our side, we would recommend you to use online portal of Czech Financial Office, which is called EPO. There is a link on the right top corner to this application, and if you will use the application, it will automatically fill in some rows on your behalf. So some rows definitely you need to complete by yourself, but some calculation will be done through this system. So it's quite easy then to complete the tax return correctly. So back to the completion. So on the top left corner, we completed the financial office. Then the row number 1, this is the row for the tax identification number, but it should be filled in only if you have been issued with one, which is in case you are a foreign individual, or in most cases when you are self-employed person. But for almost all of you, I believe, the other number will be most important, which is the birth number, and it is number row of 2, which should be filled in. Then there is a row number 3. This is type of the tax return which will be filed to the financial authority. There are 3 types actually. You should fill in the regular one, mark it with the crosses. And maybe just for the sake of completeness, there is a possibility to file adjusted tax return. When you make a mistake with the completing and you realize it before the deadline, then when you have already filed the regular one, you have possibility to file the adjusted one. If you realize this mistake after the filing deadline, it's possible to file the supplementary tax return and correct the mistake in this supplementary tax return form. But for you, the regular one will be used. So then when we move to the right side of the first page, there is a question if your tax return is prepared by the tax advisor. It's row number 5. In most cases, it will be prepared by yourself, so you will cross no. But if you would realize some services of tax advisor, then you should cross it with yes. And at the bottom of this print screen of the first page, you just need to complete the relevant taxable period for your tax return, which would be 2016 tax year. So we can move to the next page of this presentation. We are still on the page 1 of the tax return, but it's first section. In the first section, you need to enter your personal data, such as your name, surname, passport number, nationality, or your title. And then you need to fill in the place of your residence, where you are staying in the Czech Republic at the date of filing of the tax return. So financial authorities have some evidence actually about the permanent addresses of the individuals within the Czech Republic. So please put your permanent address which you have somewhere on your ID card or in your passport. And if you would be a foreign tax resident, I mean, Czech tax non-resident, you should complete foreign address in this part of this section. It's the rows 12 till 18. And in case if you are considered as a Czech tax non-resident, as a foreign individual, and you complete the foreign address there, then I would recommend to complete the rows 23 till 28 and to enter your address in the Czech Republic. Then the last row on this page is the row 30, and please mark it with crosses into the field no, because this is the question if there are any transactions between associated persons in foreign countries. So it's automatically crossed no. Then we can move to the second page of the tax return, and this will be the most important page for you. As Vladimir mentioned already, the row 31 will be the one where the rest of your RSU income will be included. So first, you should take, when you are completing your tax return, you should take your income confirmation issued by NetSuite to you and to put the income from the row 1 from this confirmation to the row 31 of the tax return. And if you have vested some shares within 2016, you need to include this income to the row 31 as well. So we have some practical example to show you how to calculate it and how to put it there in row 31. So there is this practical example. There were 32 pieces of RSUs vested on 3rd June and 3rd September 2016 in different fair market values. So first we look at the fair market values at the vest dates, which would be the 3rd June and 1st and 3rd September, and how we actually calculate this RSU income from the vested shares. So it's easy. You just take the 32 pieces of your RSUs vested and you multiply it with the fair market value at the date of the vest. So the calculation would look like that you multiply these 32 pieces by the first vest price at the first vest date, which would be 118.75 US dollars. The total income from this vest will be 3,800 US dollars. And separately, you need to calculate the another income from the second vest date, which would be again 32 pieces of the RSUs, multiply 136.4 US dollars, which would come to the amount of 4,000 about, and you just sum up these two amounts, which would then come up to the RSU total income, 8,153.28 US dollars. And as already mentioned by Vladimir, you need to complete the income in the tax return form in the Czech crowns. So this US dollars amount need to be multiplied by the course exchange rate, which is announced by the financial authority for 2016 tax year. It's stated in the instruction of General Finance Directory D31, and on the top on the bottom of this page you can see the link to the exchange rates which should be used within 2016 tax year. So in case of the Czech crowns and US dollars, it's 24.53. So when you multiply the total RSU income in US dollars by this exchange rate, you will come up with the total amount of 199,999 Czech crowns, and you will just round it to the whole numbers up, and your income from RSUs will then be 200,000, and it should be added to this income from your employment stated on the income confirmation, and together added to the row 31 in the tax return form. On the second row, which is the 32, you will just include the Social Security and health insurance paid by your employer from your employment. And as Vladimir already mentioned, there are no obligations to pay any Social Security and health insurance from your RSUs, because there is no recharge of the costs from NetSuite Incorporated to NetSuite Czech Republic, and actually nobody of you is employee of the NetSuite Incorporated. So the Social Security and health insurance will be not calculated from these RSUs which vested within 2016 tax year. So this is the rows 31 and 32. Then you just easily make a sum of these rows, and you fill in the row 34, and it's the partial tax base from your employment. So in case of the West, there is no possibilities how to exempt this income from your taxation. So always, if you get income about 1 Czech crown, it anyway needs to be completed and added to this row 31. So now we can move to the section 2. We are still on the page 2 of the tax return form. And you can see that the partial tax base, which is stated on the row 34, will be just moved to the rows 36 and 36A. So you just copy this amount there. And we are moving to the another taxable point. If you sold some shares within 2016 tax year, or they were sold automatically through the e-trade account, you need to state the amounts on the row 40. So these numbers will be stated in the attachment number 2 of the tax return form, and will be automatically then, if you are using EPO, will be automatically then added to number 440 in the tax return form. And if we can move to the attachment 2, I will just skip some pages and then move back to the page 2. But to be practical and to show you everything, how to calculate on practical examples, it would be the best to show you how the attachment number 2 looks like. So this is the attachment number 2, which you are see on your slide. The first important information is to state there that this is the income earned from sale of the shares. So it's the in Czech úplatný převod cenných papírů. And then you need to complete the income from sale of these shares, then the expenses which you occurred with the sales, which would be the fair market value and some transaction expenses. And then there will be a total gain from the sale of the shares. So we will move to the practical example how to calculate the income from sale of shares. So again, you would have 120 pieces of RSUs which vested on 15th of March 2016, and they were sold on 30 June 2016. So there is no time test fulfilled. There is no possibility to exempt the shares because the income from the sale will be more than higher than 100,000 Czech crowns. So when we move to the calculation, the selling price at the date of the sale, which is 30 June, is 135 US dollars, and the fair market value of these RSUs vested on 15th of March is about 67 US dollars, and you incurred some transactions costs related to the sale of the shares, which amount about $53. So the first step, you will calculate the income from sale of the shares. So you will just multiply 120 pieces of your shares, multiply the selling price, and then you should convert it automatically to the Czech crowns, as already mentioned, using the exchange rate announced by the financial office. How to calculate the expenses? It will be the acquisition price or the fair market value of these RSUs vested, multiply number of these RSUs vested, so 120, which will come up to $8,133, and you will multiply it by the exchange rate again to come up to the amount in Czech crowns. And easily you have the amount of your income, which is 400,000 Czech crowns. You have the amount of the expenses, which is 200,000 Czech crowns. So your total gain from the sale of the shares amounts to 200,000 crowns. And this amount needs to be reported in the attachment number 2, and then in the row on the page 2. We will show you again on the next slide. So this was the example of the taxation of income from sale of shares. But as Vladimir already mentioned, there is possibility to exempt the income from sale in some cases, which is when you fulfill the time test of 3 years of holding the shares between the vest and the sale, or if you fulfill 6 months, but in most cases it will be 3 years because the vest needs to be done after 2014 to calculate these 3 years tests. And the other option is when the income from sale of shares does not exceed 100,000 crowns. So we have included the example of these sale exempt from tax. So we will go just briefly through this example, which is that you have 40 pieces of your RSUs. They vested again in March. You sold it in June 2016. And the first step which you need to calculate is the income from the sale of these shares, which would be 40 pieces multiply the selling price, which is 100 US dollars, and the income from these sales amounts to 4,000 US dollars. When you multiply it with the exchange rate, then you come up with the amount of 98,120 Czech crowns. So you see that the total income from sale of shares is below of the threshold which I mentioned, which is this 100,000 Czech crowns. And there is no need to report this amount in the tax return form. So there are no obligations in this respect. But if you have the income higher than 100,000 Czech crowns, and the time tests are not fulfilled, then you need to include the amount in the tax return form. So we will go back to the attachment number 2. So as per the example, you will include the income or 400,000 Czech crowns in the column income, and the expenses will be included in the column expenses in the amount of 200,000 Czech crowns. And the total gain in this case would be 200,000 Czech crowns, which will be included on the final row 209 in the tax return form. And if you will be completing the tax return form using the online portal, it will automatically go to the row 40 of the tax return form. So we will come back to the page 2 of the tax return form. So as you can see, on the row number 40, you see that there is these 200 Czech crowns as your income from the sale of shares. So you just make a sum of your income from employment and income from the sale of shares, and you come up to the total tax base, which is on the row 42. Another important row is row 43, which will be just copied from row 31. And in line with this row, the solidarity surcharge will be completed, so will be calculated. So please do not forget to complete this row when filling the tax return if your income is higher than 1.3 million Czech crowns per year. So we can move to the page number 2 and to the section 3. There are possibilities to enter your tax deductions if there are any applicable tax deductions in your cases, which would be in practice some deductions regarding to your life insurance, pension insurance, donations, monetary, even blood donation, and so on. And then when you do not have any deductions, you need to complete the rows 55, 56, and 57, where the tax will be calculated. So on the row 55, you have the tax base taken from this last row from the page 2 of this slide. And it will be rounded just to the hundreds down to 5,001,200, and then the 15% tax will be calculated from this amount. So you will come up with the tax in the final amount of 750,180 in this case. And maybe another important row is the solidarity surcharge, which was mentioned by Vladimir. It's the row 59 of the tax return form, and it's calculated as the income on the row 43, which I mentioned is important to fill it in, minus social security cap, and it's multiplied by 7%. So this amount will be imputed automatically if using the IPO portal. So you will see if your income will be higher than 1,000,000.3 Czech crowns, then there will be a surcharge to be paid. If not, there will be a null on this row. And the tax, the normal tax and the solidarity tax will be sum up at the row of 60. So it's the final tax liability at this point. And the page 2 is completed. So we can move to the page 3. So how to actually decrease your tax liability? It's another possibility besides the tax deductions. You can have some tax discounts. which would be in practice the discount for your spouse if she has income lower than 68,000 Czech crowns, if you have some children, if you're a student, for example. So these will be included in the rows 65 till 69, and the children's will be calculated below in some special table. Then you will come up with the final tax liability, which is in this section of on the row 74 is the final tax liability. And when we are still on the page 3, we will move to the section 7 of the tax return form, and we need to include in the form the amount of tax advances which were paid by your employer within 2016 tax year. And for this amount, you need to again take your confirmation about your income issued by NetSuite and to use row number 12 in Czech záloha na daň z příjmu, and it's the total amount of tax advances withheld by NetSuite within 2016, and this amount should be added to the row 84. So this amount will be deducted from your final tax liability, calculated on the row 74. And we will come up with the final amount of your tax payable or tax overpayment, which will be stated on the row 91. Again, this amount will be imputed automatically if you are using the IPO portal. If the amount will be with the plus, it means that it's the tax payable, so you need to pay this amount to the financial authority till the filing deadline of your tax return, which in most of your cases will be 3rd of April because you will not be represented by the tax advisor. In case you will be represented by a tax advisor, the filing deadline will be 3rd of July, and the due for the tax payable will be again the same, will be 3rd of July. And if the amount of the row 91 will be with minus, it means that it is the amount of overpayment which should be refunded to you by the Czech tax office. So when we move to the page 4, it's the final page of the tax return form. There are only the attachments which need to be numbered and how many of them you have. So if you have sold some shares within 2016 and you had to complete the attachment number 2, then it needs to be mentioned here that you have one page of this attachment number 2. It's on at the top. Then you have the row which is concerning to your employment income. So definitely you will receive the income confirmation from NetSuite, and you need to mention here the attachment number 1 that you will add it to your tax return form and send it together to the financial authority. So in Czech it's potvrzení o zdanitelných příjmech. And the last attachment of the tax return form would be the e-trade account statement, which with respect to your vested RSUs. So the financial authorities have some evidence about the income from the vested RSUs. So in total, there should be, in this case, in this example, 3 attachments to your tax return form, and you should send it together with the tax return form to the financial authority. So actually, from my point, it's almost everything. We are moving to the final information which needs to be stated on the page 4. You just fill in the date on which you are filing the tax return form. You sign the form, and if your tax return resulted in the overpayment, you can request the overpayment through the bottom possibility, which is the request about the overpayment, žádost o vrácení přeplatku in Czech. You just state the amount of the overpayment and you filled in your bank account, even in the Czech Republic or somewhere else. If you are stating the foreign bank account, please do not forget to include the IBAN, and the code of the bank. I think that Vladimir already summarized the information and the procedures about the filing. So again, you can go when you will be looking to this presentation again, maybe from home, then you can go to the page number 10 and see what's needed for the filing of the tax return itself. So we are at the end of the presentation, so thank you very much for your attention, and I will pass my words to Robert again to say goodbye and to summarize where you find the information and what will be sent to you in this respect. So thank you very much.
Yeah, I would like to thank you all for the attention at this session, and I would also like to thank very much to Vladimir and Lucka for the preparation and for this for the presentation of the tax implications of your equity-based plans. Just to very briefly summarize it. You will receive, or you already received the manual for the preparation of your tax return. You will also be provided with this presentation. You will get a link when you can find it, and later on, based on the review of your questions, we will send you also the summary of the frequently asked questions. That's it from our side, and we wish you to have a nice rest of the day. Hopefully, not fully devoted to your preparation of your tax return.